Hi everybody, this is Scott Miller with River City Mortgage and Financial, and welcome to this week's Market Minute. This is the week of August 2nd, 2010. I cannot believe that it's already August. By the end of this month, within about 3 weeks or so, the evenings are going to start getting a lot cooler, and unfortunately our nice warm summer is going to be flying by, going to be gone, and I'm just not looking forward to that. But I guess that's part of what happens here in Minnesota. And I also thought I'd just put my hand in front of the camera and see if that looked any better. Yep, it does, but hey, that's not what we're doing. Okay, a lot of stuff going on that we want to talk about. Here, I want to throw out a number to you. $21,000. $21,000. Do you know what that represents? I'll tell you in a minute. Right now, interest rates are so low. For most loans, under 4.5%. Shorter term loans are under 4%. I don't care who you are that's seeing this, you should be going out telling your friends, family, and coworkers, now's the time to be buying a house. If you're a realtor, you should be excited about calling everybody. You should contact every one of your customers and say, listen, who do you know wants to buy or sell a house? Right now is the best time to be doing that. And then, by the way, if you haven't refinanced, call Scott and get that all done. If you're in the investment side of things, call your clients and let them know now's the time that they should be refinancing. Now, I know that investments, when it comes to brokers and different things, you have a lot of rules. I certainly understand that maybe you don't want to tell them to take equity out of their house, and maybe it's not even a safe investment, so let's not go down that path. At least free up money per month that maybe they can start investing into their future for retirement and for college if needed, whatever. So take a look at create options. We need to be excited about where things are at right now. $21,000. Here's my caution to everybody. 2000 to 2006, we saw home values skyrocketing. We saw all these new different types of loans. Exotic loans are called now. In fact, they're even called illegal now. But all of those loans came out, and we thought that equity and home values were going to rise always. We forgot it's a financial market, and financial markets have corrections. And all of a sudden, look what happened. The values stopped going up. They all corrected over the last 3 years. They've come way down, and we all realized, wow, maybe it's not going to last forever. $21,000. I did all the averages for Minneapolis area. The average home loan is $200,000 roughly. Average $200,000. Average life of the first house is about 7 years. So I used that. So I took your payment at $200,000 loan at 4.5% and at 6.5%. And that difference over a 7-year period over the average life of that mortgage, 21 grand you'd be losing, just the difference in rate. And by the way, I've been doing this for almost 25 years, and 6.5 is a phenomenally low interest rate. So now you know, relatively speaking, where we're at with the low rates. Now. Here's what's coming up economically. Right now, everyone is concerned with a double dip recession, and consumer confidence is way low. Unemployment is not in a good spot, and that's the big number coming out Friday. And it doesn't matter. They're going to change it. They're going to tweak the numbers, and we're not here to talk politics, but we're going to see some differences. It's still going to be between 9 and 10% unemployment. That's not good for the economy. Good for mortgage-backed securities, however, which is good for the mortgage rates. So right now it looks like we're going to be pretty steady, maybe bouncing around, give or take a quarter of a point. So hopefully that's going to maintain. But there's nothing is really right now stimulating the economy, and the Fed is trying to figure out, do they put more money in the economy, another stimulus package. I didn't get a stimulus check, maybe you did, I wish I didn't, but a stimulus package is now spending money, and there's nervousness about that. So the Fed isn't even sure what to do that will help us both now and in the long term without creating runaway inflation. That uncertainty makes the market nervous, and that's my caution to you. Don't get too greedy. Remember what just changed in real estate. Remember how quickly that happened. The same thing will happen with interest rates. Don't get too greedy. Don't fight for that extra eighth or of a quarter of a point. The truth is, we don't know. As soon as you think this is going to happen, as soon as you think rates might go down just a little bit further, ask yourself this: what economic information do you know or have you studied that will make you determine that the rates are going to go down any further? That's a tough question. It's not that just because I want to go lower, is what is it that you're basing that decision on? Anyway, we have a lot of data, we have a lot of information, and I can help you evaluate risk on that decision. I would like to be your lender. so you guys can call me or tell your friends and family to call me. I'm at 763-509-7400. My email address, smiller@rcmortgage.com. Now is the time for the mortgage and real estate, and I'm looking forward to helping you guys. Thanks a lot. Take care. Have a great week.